All right, this is Jeffrey Cohen, president and founder of Chicago Quantum. Here to talk today. I want to thank all the valued listeners. This week we're going to discuss how we're doing as a firm very briefly, and then we're going to talk about the markets. And I'm going to use this time to walk you through how we look at stocks, how we look at the market in a given day. You know, it's like my coffee talk, right? I got coffee. How do I see how the market's doing? How do I see what's going to move? And of course, knowing I have the backdrop of the Chicago Quantum Net Score runs to know what stocks specifically to look at. We also have a big decision looming, right? Door number 1 or door number 2. As you know, we're looking into government contracting, specifically DISA, or working through the 763rd Enterprise Support Squadron, Air Force out of Illinois, and serving our great country in data analytics and quantum computing. Or do we go door number 2, which is certification, licensing, accreditation as an investment advisor with FINRA, SEC, State of Illinois, and they're mutually exclusive. We're not going to be able to do both, and so there's a big topic there. We are going to show you the morning coffee, right? And I'll walk you through that. So just to start it off, we are still fully invested in the same 4 stocks. Earlier this week, 3 of the stocks rose. Actually, it was a good week. But CRBP, Corbis fell. So the question is, what happened to Corbis? And so I just want to talk to you about it. What happened to Corbis? And what I'm going to do is I'm going to walk through the tweets that I sent, because there's no better way to understand how we think about a stock than to actually look at what it is we're saying about it. So here's the thread. So we start by describing what the medicine's going to do, right? It's going to solve dermatomyositis. Myosis is what I want to say it. It's an idiopathic inflammatory myositis. So it's inflammation. If you work out a lot, your muscles hurt. And you know that you take vitamin I, right? Ibuprofen to bring the swelling down. Get a good night's sleep, you feel better in about 2 days. But some people, that inflammation doesn't go away. And it gets really bad. It gets really chronic. And what happens is that your proximal muscles, these are the muscles from your biceps, your core, your chest, upper legs, they start to degenerate. And then, in addition, DM also causes sometimes rashes, really bad rashes, disfiguring rashes that might make a person's day-to-day life existence not quite as nice. And so CRBP Corbis is working on that. It's a sometimes life-threatening autoimmune disease, and again, the inflammation comes because your body is fighting those muscles. It's fighting its own skin. And so it affects about 80,000 people, according to Health Advances LLC, in North America, EU, and Japan at any point in time. So I just tweet about it, right? It's a core muscle weakness and skin rashes. I think people should just know what it is that they're investing in, right? And then they have a candidate, which is called lenabasum. It's taken orally. It doesn't shut down the immune system like the other ones do, but it stops a chemical reaction. It blocks a chemical reaction that then allows the body to just drain out the inflammation. So they're in the middle of a phase 3 trial. It ended 1 year. 69 patients had the right dose, which is 20 micrograms twice a day as a pill. And this is all in addition to all the standard treatments that they would get. So there were 71 that got placebo, control group. I want to say like 20 or 30 got a tiny dose, and 69 got this. What they found was it's safe. So it's good news. The adverse side effects, the AEs, adverse effects, were diarrhea, dizziness, and nausea, about 1/8 of the patients. If it stops your skin from being disfigured and your muscles from atrophying, a little time in the bathroom is probably okay. So let's keep talking about it. At 28 weeks, the primary endpoint improvement versus the control group was good, but it wasn't high enough. So week 28. So imagine you've been taking this pill for a while, and there's a what they call a P factor or P score of 19.65%. So there's still like a 20% chance that this could have been random effect, where the null hypothesis could have been correct. Now, when you take the improvement out to 52 weeks, which, by the way, was the original primary endpoint, the improvement is much more significant, down to 8%. So it means there's only an 8% chance that it was random, 92% chance that this drug did some good. It improved, so the higher TIS scores, cases with muscle weaknesses when you took the 20 micrograms twice a day, only which great, a P factor of only 3%, so 97% likely that this was because of the medicine. So if you had muscle weakness, it worked. By the way, at week 28, if you just look at the skin disfiguration, it's a much better response. The P factor is less than 2%. So this medicine's really good if you don't have, it's twice as effective or twice as likely to be effective if you don't have the muscle atrophy and it's just a skin issue. They did not find any improvement in lung function. That was a secondary endpoint. And subjects on immunosuppressive therapies for more than a year, so mature patients, had an improvement, did see an improvement in their forced vital capacity versus the control with a P factor of 6%. So in summary, lenabasum oral pills given to patients already receiving the traditional treatments worked in improving patient outcomes versus control group in a small phase 3 trial. But it failed the FDA mandated endpoints, so there's more work to do. So what does that mean? Right? We're staying long the stock because pretty much you're buying the company for cash. You're getting a company that's focused on curing cancer and curing autoimmune diseases. And the drug works, but the question is, maybe the FDA could approve the drug just for the skin illness, not muscle, or maybe they're going to try an even higher dosage, or maybe they just want to do something. So they're going to go ask the FDA. They're going to actually share their data very soon with some conferences they're going to go to and see what people want to do. So that's what's going on with Corbus. And it's interesting when you invest in biotech, it really is a long shot, right? Like curing this type of disease would be great, but it's tricky. So what we suggested, we had a potential client come to us, was to invest equally in 3 biotechs because maybe 1 or 2 are successful, and that's enough to pay back your investment and make a profit. So then I want to talk a little bit about how the markets are transitioning between industries. And I'm going to take you to FinViz. By the way, I love FinViz. I love the website. I think they do a great job. And I just want to show you what's going on. So we're going to look at the full, not the S&P. Just want to look at the colors with you, right? So last week when we talked to you, we talked about how industrials were doing terribly. Basic materials, real estate, utilities. Now you look, it's a totally different ballgame. Every industry went up this week. And in fact, the recoveries in industries like consumer cyclicals quite high. So maybe last week people were worried about the pandemic. Maybe this week, not as worried, right? Financial services, all green, solid, right? Lots of improvement. Energy, we follow energy. Energy, actually, the integrateds look great. Exploration and production look great. Equipment and services, oil field services, refining and marketing look good. But then you look at midstream, midstream's kind of tough, right? Midstream did better, but not great. And maybe the issue there is the interest rate issue. So we're going to talk a little bit. So, lots of industries did well this past week. If we look at the past day, you see it's more of a mixed bag. So, this is a market that's really betting on industries, and so we're starting to think that way ourselves. So, Number 3, we previously spoke to you about our meetings with DISA. We attended DISA 101 orientation, and we'd met with the 763rd Enterprise Squadron support team, procurement team that supports small businesses like ours. And just like last week, I'll say reach out if you want to be part of the process or solution. We have had a few people reach out, but I'd like to have some real discussions. So this is going to take a lot of time, a lot of money, a lot of focus, a lot of risk, hiring people, getting a building, working with prime contractors. And so it's a long runway. So I just want to talk about it. Just a little more about the business, just to share kind of what happens when you're developing your own models is you can get a little frustrated. So right now, I would say we're facing a little bit of frustration and learning curve with our model and our solvers and our platforms. So why is that? So in a way, we're held back by the speed of learning because we don't want to bring in a lot of new people. So we need to apply multi-threading and multi-processing to the Python code to significantly accelerate it. So our goal is to look at 5 full stock exchanges in the United States. That's 4,600 stocks. And to do the data validation, data cleansing, crunch all the numbers, make sure the results are deep enough, and write the report in 3 hours. See, for that service, we charge $1,000. It sure would be great to get it done in 3 hours, especially if I'm going to have 1 or 2 people, watching over a run. That's a lot of money right there and a lot of skills. Last night, it took 7.5 hours to run through. And so it's a lot of work. I'd like it not to take 7.5 hours. And so a lot of learning and a lot of thankfulness for the people that actually publish, what they do and how they use things. So thanks for that. We'll talk a little bit about Value Line. So we are subscribers of Value Line. See, welcome Jeffrey. And so we use Value Line to look at specific stock tickers to help us in some of the due diligence that we do. And so, there's also a lot of research, right? You have a dashboard you set up, you have stock screeners, portfolio tools, and you can also look at their stock selection services and browse research. I find the research to be quite valuable because it's in-depth research on the industry that maybe your couple of stocks that you're looking at, are part of. So I'd like to say that everything that we talk about in terms of their scores are the property of Value Line, intellectual property of Value Line, and we're very thankful to be clients of Value Line. So this is a chart we put together. So these are the 17 dogs. These are dogs. These are terrible stocks. These are stocks that are all risk and no return. So, wow. Can't believe I said that out loud. Hope none of you own those stocks. Let's zoom on in a bit. Seriously, I hope you don't own those stocks. But if you do, just know that you are holding the highest risk, lowest return stocks according to the capital asset pricing model. And so we start with New Concept Energy. You would think it was an energy company, but actually it's cable TV. They sold off the energy. They're in cable. They get a timeliness score of 3 and a safety score of 5, right? So they make a profit. They have negative free cash flow. And this stock leapt from $1 to $25 in January. Who does that? First off, I wish I had owned the stock at $1 and sold it at $25. That's terrific. It recently regained the $10 level. It's a big volume player. It's very aggressively volatile. I read about people trying to organize short squeezes on this thing all the time, calling it the next big winner. There's nothing much about the company that makes it special. It's just in play all the time. So then you go through and you see you got a couple of biotechs in there. Some of them are kind of interesting. You got a cannabis firm named Riley Exploration Permian Inc. So for anyone in oil and gas, you know that when you read exploration and Permian, you're thinking southern New Mexico, northern Texas, you're thinking the Permian Basin, and you're thinking oil and gas. You're thinking rigs, you're thinking natural gas, you're thinking liquid fuels, liquid, crude. It's a cannabis stock. Timeliness of 3, safety of 5. It's got 18 million shares. A relentless climb. This stock climbed from $4 a share to 60, fell back to 41. It is a fast climber. It dropped 22% on Friday. It loses money. It has negative free cash flow. It just filed its annual report and it drops 22%. It's a pot stock. There was insider selling. It's 43% institutional holdings. I don't know if it's good or not, but wow. Right away, just by spending maybe 5 minutes with Value Line, I knew that. We look at Biotech. Just to show you two of them and what happens when you run a model and you look for like crazy risky stocks, what do you find? You find eyes. Okay, so eyes is Second Sight Medical Products. Timeliness of 3, safety of 5, performance of 3, overall performance of 3, and a technical score of 3. Medical supplies that are invasive. It's got 23 million shares because they this is an interesting story. It's 12 employees. New CEO in April. They're going to put a chip in your head by your visual cortex. I think that's near your brainstem. Still dangerous, maybe. Then they're going to give you glasses. And it's going to create artificial vision that circumvents, that just avoids the whole legacy eyeball thing. And it gives artificial vision to blind people that should be useful. It is an Orion visual cortical prosthesis system. First glasses, and then it looks like implants. I keep thinking of Pirates of the Caribbean, the guy with the wooden eyeball, but I think this is much more about glasses. And so no sales, negative cash flow. They cut costs way back. They got a negative book value, negative shareholder equity. But what an interesting play, right? I don't know if it's good or not, but I went on Twitter and I asked, like, anyone know about the stock? Second Sight. It kind of reminds me of Rewalk. Rewalk makes the exoskeletons for those with spinal cord injuries. I've been following them for years. They sell like 10 of them, maybe, in a year. So it's not a very big company, Rewalk, but same thing. It's like, hey, next year maybe we'll get the insurance paybacks, the Veteran Administration will back us, it'll be great. But this year, maybe not so much. So we keep looking, and now there's Onconova Therapeutics. Same thing, Biotech. This one has a Value Line rating of 1. And a safety rating of 4. So that's a timeliness rating of 1. That means this stock could go somewhere. A technical rank or performance. No, it's a performance ranking of 1. So this one's interesting. So this one just had a reverse stock split. 15-1. Thank God. What was going to happen on this one was it was delisted. They'd gotten a compliance notice with Nasdaq because the stock was under $1. So now at least it was 50 cents before the reverse stock split. Now it's $7. It hit $25 earlier in 2021. No revenue, negative cash flow, right? You look at the cash on hand. I think this one, not sure what's going on with this one. But, you just start looking, right? So it's oncology, curing cancer. So the first thing I want to do is I want to look and see if they've got a phase 3 trial. I think I did look, and I think this one is early stage. I don't think they're even in phase 3. I think it's phase 1 and preclinical research. That's a little early for me. I kind of like to have a company that maybe gets close to having a product. But so Onconova, maybe not, right? And so this stock is going crazy. And then you have others. You have Polar Power, right? Which earns a little, negative free cash flow. They got a little bit of debt, a little bit of cash, small company, 106 employees. Why is this thing bouncing up and down, right? So a lot of these are like that. So look at Socket Mobile. I thought it was a phone company. It's not. They make the little barcode scanners. They make them like as a ring you can wear, or a wand. I mean, I remember looking at those things made by Zebra back in the day when I served retailers, right? I mean, it's a good business, but it's more of like a assembly kind of a business. So I don't know. Negative earnings, negative free cash flow, under $2 for book value. So I don't know. It's like, why is this stock a high flyer? And so Value Line was helpful because it allowed me to make a very quick look to see what's going on out there, to see why, what stocks have a ton of volatility. These are the reverse run. And then I gotta talk about Eastman Kodak, right? Who wants to take pictures these days? So this has got a timeliness score of 3, a safety score of 4, so not that great. Book value is about $1. They have $17 in long-term debt, I think, per share. Sales are declining rapidly. They are bleeding cash. They have negative earnings, but the stock's up 100% this year. So I kind of remember President Trump did some deal with them where they were going to, cure cancer or something medical. What do they know about medical? There was some scandal where the CEO supposedly sold some stock. So now you got scandal. I don't know if you have accounting issues, but I'm sure you're going to look. And so this is the kind of stock that you want to run from, right? And so this is what the model finds. So if you get a reverse run, you look for the bears, you get Eastman Kodak. So kind of interesting, though. We don't short, but we might buy puts. If you can get a 5-cent put on Eastman Kodak, out of the money, the thing goes to zero or goes bankrupt, you're going to make a fortune. So just want to show you what you can build with Value Line in just a couple of minutes per stock. 3 of the stocks were not in Value Line, and so, or at least not in our subscription. And so we've got a pretty broad subscription. So, it's not perfect. And then, the next step is to go and do a full pro forma with balance sheet on any stock that you might, think you're interested in buying into. So, but again, the funny part for me was Riley Exploration Permian Inc. is a cannabis company, and they just never changed the name. I guess they didn't want people to know they were a cannabis company. So that was Value Line. So let's talk a little bit about the D-Wave Quantum Annealing run. We have not made any progress on it, but the idea is to take the best 50 or 100 stocks in our run, or if it's a reverse run, take the 50 or 100, actually it's up to 119, of the worst stocks, and run them through D-Wave and see if it mixes and matches into the right grouping. So we haven't run it yet. We haven't coded it yet, but we will. We've just been pretty busy lately. We did update our top 10 stock pick, top 10 CQNS stock pick that we had put in medium as we picked those stocks. This was in May. And I'm going to show you the article, but net, we beat the pants off of the S&P 500. And that was the benchmark. We beat it bad. We created, I want to say it was like 12 points of alpha, 12 points of excess returns in a month. It's phenomenal. We just picked 3 stocks for somebody, a potential client last week. And we're like, hey, Jeff, I made 9.5% in a week. Holy moly. So I just got to tell you, we're getting good at this. So I'm going to show you that Medium article. Because I want to, first off, I want to show you that it's out there in Medium. So you go to Chicago Quantum, we're in Medium. Got a bunch of things that we publish there. We publish a lot of the old picks, but this is the big one. So this is updated after 9, 17, and 24 trading days. We say that our model lasts 25 trading days, often 35, but we're just going to stop because
it's 20 hours.
At some point, you got to stop talking about how good you're doing, how well you did. So I just want to talk about it. So Chicago Quantum net score, final update. The top 10 stocks that we picked, we would suggest you hold them together equally weighted. They outperformed the S&P 500, tracking stock, for an alpha return of 9.7% after 9 trading days. So the best happened right after we ran it because the model was picking the stocks that were kind of like chomping at the bit. They were, to use an analogy of a racehorse, right? They were right at the gate. They were raring to go. So the S&P went up 3%. These guys went up almost 13%. Then that alpha return was 11.6% after 17 trading days, still running fast. And that went from 11.6% to 13% over performance of the S&P 500 after 24 trading days. So a 16.9% return in a month and 5 days versus 4% of the S&P. So one takeaway, if you pick the right stocks, you can get almost a 4-to-1 leverage on the S&P without borrowing money. That's tremendous results. 6 of the 10 stocks outperformed the S&P of the 9-day period, while 8 of the 10 stocks outperformed the S&P for 17 and 24 days. So some of you, I know, you don't want to hold 10 stocks. So at least in this case, you had an 80% chance of picking a winner. Let's say you just held 5 stocks. So, and just so you know, we picked Mara and Riot, read more. Mara and Riot are Bitcoin miners. So let me pull down. Let me see if I got a little spreadsheet for you down there. I like to post a spreadsheet, just so you know. This is June 11. This is the results after June 11. This is at 12:10 Eastern Time. Delayed quotes, Yahoo Finance. So you take a look at the S&P. S&P was solid. It was a 4% return. It was nice, right? But Mara was up 35.5. Riot was up 40. Those are our Bitcoin miners. Akebia, Biotech stock, only up 7.5. Then you see others. Auto is AutoWeb. Party City up 9. You see BE, which is an energy company. Bright Energy, I believe, up 31%. CBAT up 34%. So we didn't pick these for their fundamentals. We barely heard of most of them. COS is like an African oil company that has to ship the oil offshore onto a ship. So if they can't get a ship, they can't get the oil out. These are not necessarily value stocks. But it's interesting because if you take them together, these stocks went up 15.6% on average. On average. And if you notice, 8 of them beat the S&P over the time period. So it's a great result. And in fact, I was just going to show in the article the actual screen print and the results after 24 days. That was after 17. After 24 days, wow. Mars up 42%. Riot's up 47%, CBAT 33%, COS up 17.5%. I'm getting tired talking about all these double-digit numbers of returns after 24 trading days. It's awful. You make so much money when you use this model. It's killing me. So the taxes I'm paying right now on capital gains are disgusting. We can do this for you too. So we created significant alpha and we just published it on Medium. We can do this for you too, and you get it before Medium. And in fact, if you're a client, you could tell me not to put it on Medium. Just give it to you. So we are still considering whether to not look into the federal contracting work and to consider to start the process of being a registered and certified investment advisor. We're looking at FINRA, we're looking at the SEC, and the state of Illinois. No progress this week, but it's definitely on the radar. It's interesting. So I talk a little bit about the options. So there's still a few stocks and options that I mull over. And so I read a tweet from someone that talked about betting in OTM options with long durations. So first off, what does that mean? Let me try to parse this out for you. OTM stands for out of the money. So let's say you wanted an out of the money option for PRTY, which is Party City. Love the store, retailer, great for the holidays. You can buy costumes and stuff like that. It's trading at $9.62. So let's say there's a $15 option. And that $15 option is good for 2 years. It's a leap. You might say, all right, well, what would I be willing to pay for that? Well, probably a $9.62 option, which is right in the money, could be pretty expensive for 2 years. It's a pretty volatile stock. But So maybe it's $5 for an option for 2 years, but maybe enough out of the money, I can get an option that's a dime. So I might do that. I might buy it for a dime. Party City goes up to $12, $13. I got a $15 option. Now that dime is $2, $3. I sell that option. Maybe I could pick up another one out of the money when it's $20. So it's a way to bet on price movement, but not worrying about whether you got to hold until expiration date. And so personally, I believe in buying the common. I bought options once this year and lost money. But you could see the attraction in souping up your investment leverage without borrowing money. So now I want to talk a little bit about what I called the morning coffee, right? So how do you find how the market is doing? So let's take a look. This was Value Line. This is FinViz. FinViz is always very helpful. A lot of times what I like to do is I go right to home, and I see top gainers, right? These are stocks that are kind of hot, kind of happening. Maybe they're new stocks, right? Pretty interesting. And then I come here for the dogs, right? RepX, we talked about it. Riley Exploration Permian. It's not oil and gas. It's a pot stock, and it dropped like a rock. So what's going on? OMP, by the way, Oasis Midstream Partners. Tremendous, tremendous success story this year. So you take a look and you think, all right, well, maybe I know about OMP. They pay a healthy dividend. They've gone up a lot. What's wrong with it, right? What happened? And then I might look here. I love Head and Shoulders, right? See what's going on. Look at some news. I got the chart. And then I always like to look at the news as well. So FinViz, homepage, news, and you look at the S&P 500. Okay, Bank of Japan, confident in June meeting of recovery as the vaccination spreads. So, all right, maybe Japan's okay. Chinese are flocking to homegrown brands. Probably not good for U.S. companies that are exporting. Stock futures open higher. S&P looks to add to its record. So it's 6 p.m. Stock futures are trading. Boom. I know tomorrow morning it's going to be hot. S&P is going to be up. Maybe. But that starts to get the juices flowing. Right now, maybe before I go to bed, I'll check again, and I'll check out those futures. So, but it's also important. Let's take a look at OMP. What happened there? So if we go back to last October, November, the stock was trading at about $7, $7.50, right? So not bad. I think made it to 35, right? But made it to where's that $21 mark? Made it to 21, tripled. It's good stock, right? So, but something must have happened because it peaked, and now it's dropping, and it's gap down. You rarely see that. At least I rarely see that in stocks that I follow where there's a gap down, right? You see a little bit of it over here in March, but I'm seeing it right here. Something happened. What happened? Let's take a look, right? And so I'm probably going to hold OMP out to the side and take a look and see maybe that's a buy opportunity. I also look at the tweet deck. So you build your own. So Twitter feed, real hard to follow, right? You go to home. It's pretty random what you're going to find. Oh, look, Cyberlux Corporation. I tend to agree. Publication appeared earlier. Look inside. I mean, nothing. Can't use Twitter. Can't use Twitter this way. But what I can do is I can build a tweet deck. So what I did is I said STSA, Akebia, Corbis, SMLP. By the way, I still love SMLP. I had a question about that earlier. Love SMLP. I still do. I still would like to buy some. To be honest, the problem I'm having isn't with SMLP. It's with the stocks I hold. Okay, so when am I going to sell Corbis? When am I going to sell Auto? When am I going to sell Satsuma or Akebia? I want to hang on to the winners, right? And so I even just said that. Somebody asked me today, have you changed your thoughts on SMLP? And so the truth is, no. Love SMLP. They've got work to do. They got wood to chop in terms of their May 2022 $1.1 billion in debt that's maturing, that's coming due in May. And if they don't come out and put the restructuring in place, that $1.1 billion can show up as current liabilities, which will throw every ratio out the window and puts the company at risk, at least the valuation for people who don't know it. And so what I would say is, love SMLP. I'm just waiting for the right price to sell the other investments so I can get back in. Good news is I have more money than when I sold SMLP in the first place. I could buy more shares. This TweetDeck is great. So then I also see like notifications from people, questions. Like somebody liked the conversation about the cannabinoid receptor type 2, CB2. Somebody just likes it. And then I get conversations, right? So, but it's very important because you get a really good feel, right? So Scotty Dippin, right? Hey, CRBP recovering like it did after that poor news. Well, Scotty Dippin didn't understand that it actually wasn't poor news. I mean, it could have been better, of course. They could have reached the endpoints. FDA puts them in a fast track and they rock and roll. But no, it just means a couple more steps before the new drug application. It's okay, Scotty. It's going to be okay. So I might reply to that guy. I also set up StockTwits. So StockTwits is the silliest thing ever, I got to tell you, right? And I'm starting to take a look at like this ONTX, and I'm going to start following eyes. I'm just really curious about eyes, right? This is the one with the eyeballs, with the maybe the wooden eyeballs with the camera in them, or the glasses. They're going to put a chip in people's I can't believe they're going to put a chip in someone's visual cortex and then use like Bluetooth or Wi-Fi or Bluetooth probably, or near field communications to communicate with a pair of glasses so you can see if you're fully blind. I think that's terrific, by the way. So what I do, I look at the watch list. I say, all right, what's going on? So then every once in a while, though, I get really good news, really important news. But most of the time, I get kids shaking in water. I get somebody screaming in a swimming pool. I get Rocky. I get the craziest memes. I have no idea what half of these things are or they even mean. I got a spaceman dancing. So truthfully, the only time I'm really seeing something is when the volume just starts going through the roof on the messages. And so what will happen is if there's a run, let's say on Akebia. So Akebia, there's a rumor about an acquisition. They're saying that Amgen might buy them. See, Akebia, great company in the kidney area, renal drugs, right? And so not only do they have drugs that earn revenue today, but they got a new drug application that's working with the FDA. I mean, it looks like a great story. Akebia should be a $25 stock, right? So now imagine if Amgen just makes an offer for 15. Pow, right? So the minute that happens, this message board is going to blow up. I've seen this message board have, not for Akebia, but for other stocks, have like a message a second. So now you're just boom, boom, boom. And so you know something's going on. You know it's in play. So I like that. I think that's great. And so StockTwits, thank you. It's more of a community message. And then there's always just looking at different things. Like I'll look at the S&P. Usually what I do, I'm going to pull it out to the full page. A lot of times I'll start by looking at it for the year, and then maybe I'll look at it for the month. Because that looks pretty flat to me. That's the S&P 500, the futures, right? But they're up now. It's nice. I look at Nasdaq. Always go to full screen, right? Maybe start at the year. I'm looking at something here that looks like it could have been a Head and Shoulders, but it isn't because it's gone up again to new highs. So let's take a look for 5 days. Kind of flat over 5 days. I'm not really sure what happened there. But, of course, you would expect, beginning of the morning volume and end of the day volume. Take a look at that. That's a lot of movement throughout the day. Take a look at the Russell. Same thing. You just keep going through it. You take a look at crude oil. So, constantly amazed at the strength that crude oil has in this market. Look at that, $74. I remember, I thought it was last week, it was down. Yeah, look at that. It dropped to $72.70 over the month. It's been as low as it looks like about 67, 68, 67. And so, what's going on? What drove it to $74.21 a barrel? What drove it? I don't know, but You don't have to know. You just have to know that crude's up, so energy's up. So oil and gas is up. I bet you natural gas is up. I'm going to show you how I know that in a minute. Gold. I also like to look at gold, right? And you see here over a year, pretty lumpy, pretty bouncy, and kind of at a low for the year. Not quite, but close. The euro, $1.19. Man, this thing's like $1.20 and above all the time. What happened? What happened? Now, it's up from when the pandemic roughly was, but that's not great. That's a strong dollar. We don't want a strong dollar. Treasury yield made it back up to 1.5 again. It's actually 1.536. It's up almost 5 basis points. That's a lot, by the way. That's a lot. And so you see yields up, you start worrying about things like growth stocks, or you worry about biotech because, easy money, free money pumps up the dogs. The stable, the consumer cyclicals, the utilities, they don't mind it when interest rates go up, but anyone trading at 100 or 1,000 PE, they mind, right? The VIX, look at how low that VIX is over the day, over the year. We are at an annual low almost for the VIX. This is crazy. So with the market so high, and yet look at that, the market is believing the Fed narrative. The VIX, which is the fear, another word for it's the fear index, is way down. Let's take a look at Bitcoin. So last I looked, Bitcoin was under 30,000. It had dropped. It was crazy, right? It was the end of Bitcoin. Well, not really. It's not the end of Bitcoin. Up to 39 over the year. Now it's back up to almost 35,000. It's up $2,100. Bitcoin trades 24/7. We'll look over the month. It's been pretty rocky. Now, truthfully, if you like Mara and you like Riot, you want to buy into Bitcoin miners, you're going to wait for one of those dips. It's interesting, right? It's just interesting, right? So you look at the other cryptos, they're down as well. Then I like to go to FINRA. So FINRA, you always have to accept, or most of the time you have to accept the rules and regs. You can't screen scrape. Use its information only. Don't use it to invest. But what I like to do is check out the bonds. So I take a look at the bond yields, right? And you see Treasury yield curve. Basically zero up to 6 months, 2 years. It's up a little, not much. A quarter of a point, right? Only 2.16. It's 10-year. You see the 1.54. So these are low rates. And so you just take a minute and think about it. And then sometimes I do a search, and I want to check out my friends, right? So SMLP is one of my friends. Love SMLP. I'm still a bull. I take a look, and this is the preferreds. It's trading at $72. Oh my God, 719 out of 1,000. Par's 1,000, by the way. What's going on? I just want to show you. That's high, right? That's high. Somebody is bidding up the preferreds because they must think that there's going to be a trade-in or some kind of an exchange, or maybe SMLP is going to do its refinancing and be able to pay its dividends. Right now, it's suspended all dividends and distributions, and so it's basically like in default. Like it's not. There's no money coming out, and so Standard & Poor rating of D, high yield. It's not in bankruptcy, thank God. But they are not paying. They have suspended their payments. And so, but it's interesting, right? You take a look, you think, all right, SMLP is looking good. Now the stock price is down $1, but the preferred's up like crazy. So they must think that this refinancing and all that's just going to happen. Look at that, 99 cents on the dollar for 2022 debt. That's great, right? That's basically pricing it at redemption. And I might look at other bonds then. Let's take a look at another one. This was a short squeeze kind of thing. At least they thought it would be. Geo. So Geo, I don't even have it. I don't even look at it anymore. But you look at their debt. 22s trading at almost 100, almost par. 23s trading at 93 cents. 24s trading at 82 cents, 83 cents. And the 2026s are trading at 77 cents. So you can earn some pretty good money there on the 6% 2026s. Has it changed much? The stock's been going up and down. I haven't looked at the stock, actually, so I actually don't know what it trades at. But yeah, it dropped. I mean, the last I looked, it was down. It was like 60. That's about when I looked at it. I thought, wow, there's a way to make some good money here. And I actually tweeted that now would be a good time to buy some of those 2026s. Because if there is a short squeeze and the stock goes up, they can buy those back. They can issue stock and buy some of that debt back at a discount. 40-cent discount is pretty amazing. But it looks like maybe they beat me to it, right? Stock, the debt almost hit 80 cents. Is now back down to 72. So, or 77. This is interesting. So you learn a lot in the bond market. So I think it's important that you take a look. This is something, this is Nasdaq. This is the book viewer. So I had trouble loading this before in prep for this call. We'll see if it loads. It's just giving me a little bit of problem right now. There's a network issue or something. I also like to go to the CBOE, and I like to look at the, this is the top of the book. So if I look at something that might be open now, I don't know what might be open now. Maybe Spider might be open now. No, maybe. And you see on the different exchanges, yeah, nothing's open. But what will happen is you'll have a loading of the shares at each price. That's great. I love having that when the market's open. And they load those before the market opens, so you get a feel. Wall Street Journal does a great job of posting a bunch of debt indices. So triple C rated debt, right? Junk debt. 6.5% yield. This is why I have faith in SMLP or NGL is another one. Being able to restructure, refinance. Even if you pay 7%, look, I don't care, right? 7% debt, 1.1 billion, walk away a winner. But SMLP's got great assets. Maybe they can even do better than that. That's the index. Maybe they can do 6-point debt. Love seeing that, right? Latest yield. You want to know that, right? Because that yield has been as high as 14.777 in this year. And so this is a big deal, right? So the market is still good for high yield debt. You should know that. You need to know that when you go and start looking at stocks, looking at the day. This is just a chart I want to share. So everyone worries about inflation, right? I worry about inflation. This was last updated in May, so it's pretty stale data. It's a month old. But when I did my homework, I realized it was the velocity of money that was driving deflationary pressure, which was causing the Fed to add liquidity to the markets. Now, that's a mouthful. Maybe I can unwind it for you. But let me just say it this way. Used to be money moved fast. A dollar was spent often. It was put in the bank, it was lent out, it was put in the bank, it was lent out, it was spent, it was spent, it was spent. That money flew. Right? Well, now money's not getting spent so fast. The velocity of money is pretty much at all-time lows. The lowest I've ever seen it is 1.103. It's at 1.122. It's pretty much the same value. So money's not moving. Well, where is it? Is it in the bank? I mean, are people just locking it in a vault? Is it under a mattress? I don't understand, but it's not moving. We're not investing in Main Street. We're investing in Wall Street. Something's happened since the Q2 of 2020 to just punish the velocity of money. And this is why the Fed could basically create $4 trillion of money and not create what they think to be sustainable inflation. So I look at this. Because this thing ever pops back up, the velocity of money, and just start running in the streets screaming about inflation. If this thing stays at 1.1, we're good. There's no inflation. Systematic monetary-based inflation. It's all supply shock stuff. Transitory. So I watch that because it's important. Now this, I might look at a stock. So STSA Satsuma, this is my largest holding. You can see this thing here, okay? When the short-term moving average crosses above the long-term moving average, 200-day, That is called a golden cross. We had a golden cross. It was beautiful. So the 50-day is orange, and the beige is the 200-day. So they both, the 20-day and then the 50-day. So golden cross, and by the way, there was more, it doesn't show it here, but there was more volume. So you have higher volume confirms the golden cross, and look at that stock fly. Well, I want to know that. By the way, all this data isn't necessarily right. So insiders own 10%, institutions own 73%. So you add those up, you're at 83% insider and institutional ownership. My latest data says 86%. So we're close, we're spitting distance. So if 86 or 83% of the stock is owned by insiders or institutions, who's doing this? Who's driving that stock up? That's new money. Guys, that's new money pouring into Satsuma. Mizuho raised its price target to 7, and then they raised the price target to 15. So they got a price target of 15. This thing's only trading at 7 and a quarter. This is a phenomenal story here. Now it's 78% off the 52-week high, so some people would say, oh, I got room to grow on this one. It's got an 80 RSI, or relative strength index. This is a stock that is hot, and you want to let your winners run. So if you own 4 stocks, you would pull up FinViz for the 4 stocks. Just take a look. Study it. Study the chart. Try to figure out what happened here. So the stock went up, came down. Stock went up more, came down. Stock went up, came down. Broke its neck and was a dog for 3 months. That looks like a head and shoulders, but you got to have a better view of the volume. You want to look at a daily chart with good solid volume data. All right, fine. So for 3 months it lagged, right? We called the stock right around 5 and a quarter. That's when the Chicago Quantum Net Score picked it. Actually, the Chicago Quantum Net Score run identified the stock as an important stock to look at. So this is one of the features our clients get. This stock had both a price spike and a volume spike in the same year. It was the only stock to have that, which caused me to do the due diligence on it, which identified it as an undervalued stock at 5 and a quarter. So we're up 40 points, 40% on that stock. It's nice. It's helpful. I want to show you my current holdings. I'm going to be really transparent here. So Satsuma, we got 9,600 shares. Akibia, we got 5,000, and we're not pumping and dumping any of this. We hold it. CRBP, Corbis, we got 6,000 shares. For auto, we got 3,100 shares. You can see the change in the position in it. The reason I bring this up is look at the volumes on these things. Even auto is probably triple the volume from when we bought it. So we bought it because the model on 3 of these were top 10 stocks. And all of a sudden now the volume doubled, tripled, quadrupled, and you see just significant growth in these stocks. And so it's great. So we look at that, of course, right? We want to look at our holdings. But then we want to look at other things like top 20 picks. So this is a set of top 20 stocks that were picked June 2nd. It's been a while. It's been 25 calendar days. It's probably been 3-4 weeks. It's a stale list. But you look at the stale list and you think, all right, well, how are we doing up here? We got CRBP and Akibia. You got Riot and Mara, right, for the Bitcoin. So I'm taking a look and I see reds and greens. I see a lot of reds. It's about 50-50. So this run is old. Maybe I'm not going to worry about it. I'm not going to think about it. I always keep my eye on crypto, even though I don't trade it. It's important to know. I think it gives you a good sense of the market. And now I'm starting to track EYES and Ontix, because those were the pharmas that we identified with the value line index that we talked about. That's important for you to understand why. So we look at value line, we understand a little bit, 5 minutes on the stock, and then we start to take a look and see how it trades, see how the book builds, right? Is this a buyer's market or a seller's market? We'll look at the short interest, right? So I might go and take a look at iBorrow, and I'll look at it for EYES, right? EYES, EYES. Let's take a look. All right, you could borrow 550,000 shares. It's fine. It's plenty. It's not a short squeeze kind of a thing after all. So, we've taken a look at a lot of things. I'll take a look at the midstreams because I know I got the question about SMLP. I love SMLP. I got to tell you. I'll show you another screen. But I'll see how it's doing. You know what? The 3 smallest midstreams were down. One's up, a lot of down. Look at all the down. Look at all the red. Midstream is not good yesterday. It wasn't good Friday. So let's take a look at the fundamentals. I'm going to have to make this smaller because it's not about the details. It's about the feeling that you get, right? So I'm looking here and I'm looking at price to book. I got a quarter right there. SMLP is trading at a quarter book. NGL, love NGL as well, it's trading at half a book. Rattler is trading at 64 cents on the dollar book. Now Rattler paying a dividend. They're expecting earnings per share of $1.40. They're going to pay a dividend of $1. All right, I'll buy that. You know what? Would you spend $11 for a share for a stock that's got probably $15 a book on it? And is going to give you $1 a year of dividends? I might. I like that. Right now, SMLP, assuming they get done with their financing, right? They're going to have $3.50 of earnings. Let's say they even pay half of that as dividend. It's $1.75. Would you pay $29 for a $1.75 dividend? Maybe. Would you pay $29 for a stock that's got $100 a book? Maybe. Looking like a good deal. This one, same kind of thing. It's trading at half book, right? Used to pay a dividend. Now it's only going to have 30 cents of earnings. This one's a bit of a struggle because what are they going to pay? A dime dividend? 20 cents? Still not bad though. $2.34 stock. So here you're kind of playing a long game. Now the challenge with SMLP. So let me talk about the other thing. It's a master limited partnership. So you put your $29 down, which is great. They earn $3.51 a share. Let's say I buy 1,000 shares. At the end of the year, I'm going to show $3,510 of earnings. Real earnings, IRS earnings, income. I got to pay tax on that. What? Yeah, I got to pay tax on that. $3,500 worth of income. What's my tax rate? 40% with the new increase, federal and state, investment tax, whatever they got. That's like $1,400 in taxes. 1,000 shares. If they pay out $1.40 in dividend, all right. At least I made enough money to pay the tax. That's tough. That's a tough play right here. If you don't think they're going to be paying a dividend this year, you're just signing up for a beating right now. $1,400 tax bill on 1,000 shares. It's just important to know that. Do you have a net operating loss? Can you handle this, right? And please do not put this in an IRA because IRAs cannot have earned income, I think over like $1,000 or something. So be very careful. And this is OMP, right? This one is at $3.72 times book value. It's going to earn $3.26 a share. So 1,000 shares, $3.26, roughly speaking, you're going to have $1,300 tax bill. But it's going to pay you $2.20 in a dividend. That's nice. So now, $1,300 in taxes, $2,200 in your pocket. You got $900 for 1,000 shares. You put in $23,570 to make $900. What was that? 3 points, 3.5, 4 points of dividend after tax. Not bad. You got to know how to play your master limited partnerships. That's important. The other thing I like to look at is I like to look at the after hours and the pre-market screeners. So let's see what's trading after hours. Now this was updated on the 25th. So it would be more your pre-market, but you can kind of see what's trading, what's hot right now, what isn't. So along with your futures, you're also looking at maybe any aftermarket. So what I might look at if I had a stock that I think might be active pre-market, let's say Akebia, maybe. After hours, up 2 cents. after hours, ending at 8 p.m. Eastern, it traded 2.65 million. That's a lot of shares after hours. I mean, we could take a look at some other stocks after hours, like SMLP. Didn't trade any stocks. Didn't trade at all after hours. Let's take a look at CRBP. You can see now you're starting to build a feeling, right? So CRBP is up a penny after hours. This is Friday. 435,000 shares. That's $2 stock. That's not a lot of shares. It's like $1 million, less than $1 million, but still, it's a lot of activity for a stock that was pretty much a sleeper. Look at Satsuma, my favorite stock. Unfortunately, lots of volume, 290,000 shares, down 40 cents. So you could see how it dipped, came back up, and it just traded flat throughout the evening. But always very interesting, right? So the 65-day average in volume on the stock is 300,000 shares. It traded 300,000 shares after hours. The stock is in play. Stock is a hot stock in play. So now I'm looking like, all right, well, how did it play, right? Take a look at that. It's been up all week. It's been a beautiful week. Let's look at it for the month. All right, it came down. By the way, I had no money to buy here. I wanted to. That's when I was looking at the options as well. The $7 out of the money calls. But you see it came up to 7. It's beautiful. So you start to look, right? Geo is at 746. This was a potential runner. I mean, it went up 8 cents after hours. It's an interesting stock. You look at it over the year. So you see what we're doing now? We're taking a look at a stock. Just for the heck of it, right? Something we were looking at. You can see it dropped to about $5.20, $5.12. And then it popped all the way up. Get out of there. It actually made it to $10 right there. Then it came back down. I like the stock. It never hits $5 again. I'm all back in. Love the stock at $5. I think it's a great deal at $5. I may never see it at $5 again. I might have to see it at $7, but. All right, so now I'm going to wrap it up. Been talking a while. I want you guys to hopefully you get a lot of value out of this. Let's just go back to the summary. So first off, I hope you good luck. I wish you good luck in the markets, and I hope you enjoy the video. So we are a group of quantum computing consultants that work with clients across industries. If you want to learn more about us, just email me. I'm Jeffrey. You can check out the website. It's a nice website. You can just call me. By the way, we have an office landline. Can you believe it? I don't even think a lot of people know what a landline is anymore. And I answer it when you call. I sit in the office and I answer your call. We are Better Business Bureau A+ rated. And we work hard to honor our commitments, and we are extraordinarily frugal with our clients' money. We are long 4 stocks. We are potentially going to buy into 3 other stocks. We are not pumping and dumping. We're also potentially looking at buying into the Bitcoin miners. These are all extremely risky, highly risky positions. You could lose all your investment. So please do your due diligence, do your research, know what you're buying. And we are not investment advisors. This is not investment advice. You can lose your entire investment in common stocks or even more than your investment with options or leveraged or margin investments. And by the way, it takes time to make money. You're not going to necessarily make 16.9% in 24 days. The model did great for our clients, but may not always do well. Sometimes the market starts to drop and then everything drops. So, and please see our website footer for a full list of disclosures. Thank you very much for listening. You take care now. Have a great week, and we'll talk to you later. Bye-bye now.